Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, May 3rd. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. I had a lot of people asking about questions about like options and things like that. If you haven't done this, you could check out on our website here on bluelinefutures.com. You could go to education. They got a lot of different videos. They've got different things covering kind of all different aspects of the markets here. So if you want to learn about different strategies, like option Greek strategies, intro to options, things like that, there's a whole wealth of information on here that you could check out. So I encourage you to go ahead and go look through that. Also, you can register for the premium research, create a username, password, and you could access all the reports as soon as they're posted. So a lot of people like that as well. So getting into the markets here, a couple things going on. One, we do have the Fed meeting tomorrow is when they're supposed to raise rates here. But you can see that those treasury yields, they punch through a new cycle high. They're factoring in about 10.14 interest rate hikes at the moment. So you times that by 25 basis points, that's where it's going to get you once this rate hike cycle's done. I don't think it's going to happen. Most people don't either because of the fact that they're tightening into this slowing global economy. And also, it's just not, they're just so far behind on it. They're going to continue to crash U.S. equity markets. So we took some shots. Some people bought 10-year treasuries here right around this area. We're probably going to kick them out. We get north of 120, 121, somewhere in this range right here. That'll be the bottom end of it on treasury yields, and we'll probably start to cycle back down. So these things have been long overdue for a bounce. So we're kind of going to play it. We think we'll get something like that, and then we'll end up kicking those out. Looking at other markets here, like the gold market, bit constructive today. You've got the dollar index. It's actually starting to come off. And the reason why it's coming off, so if you look at the dollar here, we're kind of coming off just a bit here. Hopefully we can get a bit of a sell-off because of that correlation between the dollar and gold's been quite strong. It's been inversely strong. So we need the dollar to back off in order to get some legs behind gold. Looking at a couple of stories out here, I always run one of these incognito search browsers because I can access a lot of the stories. Like if you get annoyed that it says you've reached your limit on like 2 stories on Bloomberg or Reuters or anything like that, you can always run an incognito window and you can access them. So people asking about platinum. Platinum did take off to the upside. Let me just quickly get you a chart here on platinum. Break it out to the upside. I'm reluctant to take it off yet. Might have a little bit more legs. I drew this trend line yesterday or the day before, and it did break out to the upside. So we were looking for that. Might take platinum off right in this range, just over 1,000, like 1010. Kind of corresponds with like 200-day moving average, 50-day moving average. They all kind of come in right around this area. We have had a series of, these lower highs, and we also have kind of this speed line we need to, we actually ran up against already. We need to break through that, and then we can bust through, and we'll probably go up to like one of these moving averages. That's where I look to take it off here. You got stochastics turning up over oversold territory. But again, kind of the story, because we're always looking for, the clients are always looking for a narrative here. It was the rise in U.S. factory orders beat expectations in March, came out by Reuters, and there's a whole story on here. And it says that, here, even orders for motor vehicles and parts rebounded 3%, suggesting an improvement in global supply and semiconductors. So that's why you got your platinum pushing on up, palladium going up a little bit as well. Oh, back to the dollar. I showed you how the dollar is selling off. There's a story here. This is on Bloomberg. Traders bet Bank of England will join half-point rate hike by September. So you get, remember the way the currencies work is that the dollar is just this inverse basket. I think it was designed in like the 70s or 80s. And that's why you see the dollar come down when, you get this Bank of England talk, you get maybe the ECB, maybe they start talking about raising rates at some point in time. I don't know if they'll be able to raise rates or not because the global economy is going to get pretty bad. But other than that, those are, that's a couple of the things that we're looking at here. Copper, not doing anything. It's really unfortunate. If we had copper up today and then you had dollar down and you get that factory orders, you get that platinum going up, you're going to see that like silver should be up like 40, 50 cents, and it's not. And it's all because of that interconnection with copper. And then I went over yesterday that slowdown in China. I was quoted in a story here on CNBC and it was about gold prices sliding 2%, yields dollar gain ahead of the Fed meeting, and they quoted me like halfway down here somewhere. So the pressure on the gold market, stronger dollar and yields amidst fears that the Fed might be more hawkish. And I still think the Fed is going to be really hawkish, but I think that those yields are going to back off. We ramped up to cycle highs here, and then also you start getting some rhetoric at other central banks. You're going to see that you're going to see the dollar back off, and that'll really help us out. So again, if you're trading silver, keep an eye on copper. We get the rebound in copper, you'll get the rebound in silver. Thursday is when they come off a holiday. It's Wednesday night and a Thursday for China. That's when we think the latest that they could come out and spin some positive economic news. They need something over there, whether it's right or wrong. I don't really trust their data or anything, but they need to jawbone their economy and prove that they're, some powerhouse and things like that again. So other markets we're looking at, we're taking a look at some of these grains. They look really good. They're backing off. They're giving us some entry levels, corn, soybeans. I think these are all kind of easy buys with small stop losses on there. So remember, they do have the micro contracts on those. So if you're interested, they do have 1,000-barrel contracts on corn, wheat, beans. We've been putting some of those on today. And then on treasuries, we think there'll be a bounce. Platinum, probably going to hold on to it a bit longer. Silver really needs that, again, dollar, copper. They need that to work out. I think gold gets its move. Remember, historically, gold does bottom on that first interest rate hike. So, if you have any questions, give us a call, reach out. You want to get a 2-week trial, Morning Express, let me know. We'll send it out to you. Just shoot me a comment or hit our website here. And you can fill out your username and password, and that'll get you on there as well. So if you have any questions, give me a call, 312-858-7303. Remember, futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.